Good afternoon, traders and investors. Will back here with another one, and it's that time of the week again where we go over the top 5 options plays for the upcoming week. Now, keep in mind, guys, all of these options plays are going to be for selling options, more specifically for selling put options as part of the larger wheel strategy that we like to run on the channel. Now, keep in mind, guys, that this is a very easy strategy to do, whether you're a beginner, intermediate, or even advanced investor. It's a very easy way to collect premium every single week without risking too much. Now, in terms of what we're going to do today, guys, is very simple. We are going to do a little bit of weekly prep, see how the markets are shaping up and what we could expect next week in terms of macro catalysts and earnings catalysts, and a little bit of technical analysis on the SPY and the QQQs. Second off, we are going to take a look at some of the strategy rules that we like to run when we're doing this selling put option strategy. And then number 3, of course, guys, we're going to jump into the top 5 options plays for the week. And as per usual, I always have a bunch of bonus plays, so those will also be included at the end of the video. So a lot to cover in today's video, guys. Let's jump right into it. So in terms of our weekly prep, where are we currently in the markets? Well, as you can see, the SPY is well on its way to a new all-time high. Daily uptrend is very, very healthy. Even if we were to get a little bit of a pullback here, guys, what I want you to notice is that our long-term weekly bulls are in full control, and we have great short-term support below us down here at around the 565 down to about 560 region on the SPY. So I do firmly believe that any extended dips over the course of this week or the next week should just be buying opportunities for the long-term bulls to step in, play some defense, and get a little bit more of that rally as we move into late October and early November, which is usually favorable seasonality for the markets. So not too much in terms of big red flags on the technicals just yet, but we have to be cautious, guys, because this week is an absolutely huge week for earnings. It is the start of the big weeks of earnings that should last over the next 3 weeks. So keep in mind, guys, be very, very, very cautious in terms of playing any stocks that have earnings this week. Usually I do not like to do it at all. I will wait until after earnings to make plays on all of these companies. I'm not going to be playing every single one, but the biggest ones of their industries. If Bank of America has a drop, Johnson & Johnson, PGR, Interactive Brokers type of thing, Morgan Stanley, right, is just TSMC, Netflix perhaps, although they are expensive. So only the very large companies will I be seeking to play if they have a drop after earnings. But be mindful, guys, this can have a very large impact on the markets. The focus of this earnings season is going to be corporate profits and layoffs, because we know the two concerns for the markets right now are economic slowdown and also unemployment. So we need to keep a close eye on what these companies are giving as guidance in terms of corporate profits. Are they fine or are they dwindling because of the macroeconomic challenges of the economy right now? And are these companies starting to lay off employees? Those are going to be the two things that will most likely move the markets more than anything else. Now, in other news, in terms of macro prep, guys, we don't really have that much in terms of big macroeconomic events this week. Only the retail sales figure, which could be a big one because we know that some of the concerns recently have been a weakened consumer, right? So this report should hit the markets quite hard in either direction. So be mindful of that on the Thursday. But other than that, guys, other than that Thursday event, should be pretty much smooth sailing in terms of the macroeconomic data. And of course, the biggest movers should be your earnings plays, right? So all in all, the markets are shaping up to have a decent week, but we do have a lot of earnings catalysts as well. So keep that in mind. But as I said, no major red flags on most of your market indexes. As a matter of fact, all of your major categories in the S&P are performing quite well and are all in long-term weekly uptrends. So keep that in mind. Now, in terms of some of the strategy rules that we're going to be looking at, guys, I'm going to be going over these extremely quickly this time, because I have a 30-minute video, guys. If you haven't seen my video on the detailed version of this strategy, I'll leave a link down below in the description and also put it top right corner in the video right now. So definitely check it out. I tell you guys how I pick my stocks, how I pick my strike prices, and just a more detailed view into how I run this strategy as a whole. So let's go over these very, very briefly. So writing puts, guys, what does selling puts entail? Well, it's extremely, extremely simple. All you need to think of is it's kind of a buy limit order that pays you. Let's say I wanted to buy 100 shares of Google down here at the 160 mark. There's two ways of doing it. One, I can just set a buy limit order down here at 160, but if it doesn't get filled, I don't get the shares and I also don't get paid anything, right? If it just runs away from us. That is where selling puts comes in, guys. If we take a look at Google's options chain right here, you will see that if I were to sell the 160 put, I get about $80. So in the event Google closes above 160 by the Friday session, we just get to collect all of the $80, put it in our pocket, keep it, and we do not have to buy any shares. However, if Google falls below 160, then the buy limit order is triggered. We still get to keep the $80. It reduces our share cost by about 80 cents per share, and we end up with 100 shares of Google where we wanted to buy them initially. Very, very, very simple strategy, guys. Just think of it as a buy limit order that pays you, whether or not it ends above or below the actual strike price by the Friday close. So moving into the actual strategy rules right now, let's have a look, right? So number one, and most importantly, always only write puts on a very solid company, guys. It needs to be a high conviction company for you. If ever you get assigned on a position that you do not have high conviction in, sometimes managing the trade, guys, could be a little bit mentally and emotionally cumbersome, right? You're going to question yourself, why did I buy this one? It's not really high conviction for me. So stick with only solid companies, please. Number two, we want to be targeting companies that are in a monthly long-term uptrend, such as the SPY. This is the weekly chart, but you get what I mean. Monthly chart should also look like this, or a long-term range of accumulation. These two things will allow us to have the bulls on our side to play defense at the target levels that we're looking at. Now, number three, company needs to not have any earnings this week. You guys have seen what's happened over the past 6 months, right? Companies sometimes expected to move 4 or 5%, and sometimes they move down 10, 15, 20%. So if you don't want to end up with any outsized losses and nasty surprises after earnings, do not sell any puts on companies that have earnings on the upcoming week. It's just better to be safe than sorry, guys. Number four, we want to be targeting stocks that are in a big area of support or a area of breakout retest. So take a look at the Autodesk chart right here. A large area of support, guys, is very, very simple, right? It could be this massive 1.5 year range of Autodesk at the lows. Writing puts in a big support level is usually a profitable endeavor. The breakout retest trade is something like this, where we have a beautiful new weekly uptrend. It breaks out of the top end of this range, retests the range to the downside, and then runs. This retest area is usually a very high probability trade. So most of all the trades that I ever showcase on the channel will be respecting one of these two criteria. Now, the next ones are very important too. Where we want to be writing these put options, guys, well, they go hand in hand. We want to be writing these puts at or lower than the expected move. If you do not know what the expected move of a given stock is in a given week, guys, just Google optionsai.com expected move, and you'll have this free website that gives you all of the expected moves for the upcoming week. It's just where Wall Street estimates that the stock will go up or down in a given week. And we always want to be writing options below the expected move, because if it comes below the expected move very, very quickly, Monday or Tuesday, usually we can expect some mean reversion midway through the week and pop us back within the expected move. So we always want to be writing puts below the expected move for the week. Hopefully that makes sense. And the next point goes hand in hand. We want to be writing on a red or flat day. I never chase the market to the upside. I'm never writing puts on companies that are green on that day because of what we just talked about for the expected move. You want to be writing puts when a stock is coming down into the expected move, so we can write below the expected move further and further, which increases our odds of not being assigned. Now, the last one, we want to be writing puts between 0.5% and 0.75% in weekly premium. This is your ROI, guys. In my 6-7 years experience of trading this strategy, this is the sweet spot between having good profits and also a low risk of assignment. Usually for writing in this criteria, we have a 90+% win rate on these trades, and we do get compensated fairly decently for them. What do I mean by the 0.5% rule, guys? Well, very simply, if you take a look at Google's options chain right here, you are looking for 0.5% of the strike price on the bid. So if you want to do some quick mental math right here, very, very simply, you want to look for half of the strike price in cent increments. Google right here, as you can see, 0.8 divided by 160, that is literally 0.5%. But if you don't want to pull out the calculator every time, guys, just go by the mental rule. Look for half of the strike price in cent increments. So if you're interested in trading the 150s, which are too far away right now, but let's say it was closer to there, you pull up the options chain, you should see half of 150, 75 cents on the bid. Quick mental math, you know you're getting your 0.5%. This is how we go through a ton of options chains very, very quickly and know whether or not a strike is worth it for us. Now, moving on further here, guys, and if we're always writing between 0.5% and 0.75 On an annualized basis, right? For 52 weeks, you should be making anywhere between 26 and 30% annualized, which is roughly double the S&P 500's historical performance. So very good ROI, but it's also a very conservative way of trading as well. Because if you go too close, guys, and you try to get juicy premium up here, closer to 1%, you'll see it's just too close. Your risk of assignment is very high. That's why I like the 0.5% rule. It gives us good ROI, and the risk of assignment is relatively low. And then lastly, we want to take profit at 90% of the contract value, guys. The beautiful thing about this strategy is it's very passive. You only need to run it maybe 20-30 minutes on a Monday or Tuesday, and you're done for the week. You find your plays, you enter the plays, and then you let the time decay pull the premium out of the option for the remainder of the week. Now, the reason I say to take profit at 90% is because if ever by let's say you write on Monday morning, if by Tuesday afternoon or Wednesday, it's already 90% profitable, well, you just want to close the trade because then you recapture all the buying power and you can possibly go shopping for another position with the remainder of the days in the week, right? Now, in the event we get assigned, guys, so let's say in this theoretical example, Google ends below 160 and we have to buy the shares. Well, selling puts is a buy limit order to enter a trade potentially. Now, how do we get out? Well, we get out by writing covered calls. Think of covered calls as a sell limit order. Now, very simply, guys, if we get assigned Google shares at 160, the very following week, we're going to write covered calls at the 160 strike to possibly get out of the trade. And the same rules apply. We're going to be looking for 0.5% and 1% in weekly premium to know if the covered calls are worth it for us. And we want to write at the assigned strike price or one strike price higher. In the event, the only time you'll see me writing one strike price higher, guys, is let's say on Google I get assigned at the 160. Let's say by Friday, the stock ends at 159, right? And then the very following Monday, when we have to write covered calls, it just pops up, has a beautiful gap, and pops up to the 162, 163. That is the only time where I might write one strike higher, is if we get a gap up and beautiful pop on the Monday session thereafter. That is when I'll write one strike higher. For every other case, guys, I'll be writing at the assigned strike price. So those are the strategy rules. Hopefully all of that makes sense. Now let's get into the good stuff. Let's get into the top 5 options plays, and one of them is going to be Google. You'll see that a lot of the plays are recurring from last week because they're still in very good levels. And in terms of the last week plays, guys, just to bring it up, they all went extremely well. This is from our private member Discord, and you'll see in terms of the last week wheel trades, a lot of which were showcased in this same video last Sunday, right? You'll see that we ended up 6 wins and 1 assigned play that we got assigned last week. That was already called away, resulting in a 1.7% ROI in 2 weeks. We're looking for 0.5% minimum per week. So this was well above. And every other play, guys, was beautiful if you followed the top 5 of last week. So moving on to the top 5 of this week, guys, number 1 is going to be Google again, because I love this stock. Now, there's a few reasons that I love Google very much, guys. Number 1 has to be the valuation, right? Valuation down here in the low 160s is extremely cheap. It's one of the cheapest Mag 7 stocks as a whole, and Google has kind of been left behind in the most recent weeks. A lot of our Mag 7 names are close to the all-time highs, except for Google, continuously getting bogged down by those Department of Justice lawsuits. I don't think that it'll have any meaningful impact on the longevity of the company, so I'm still very interested in playing Google at these lower levels, especially closer to the 200 daily moving average down here at about 158. So the expected move for the week for Google is 159.40, and we're looking for this possible beautiful head and shoulders, inverse head and shoulders pattern to come to fruition. So let's have a look at the Google options chain, shall we? So as we saw in the theoretical example, we are getting exactly 0.5% at the 160s. So that is the strike that I'll be looking for this week for a play on Google. It is very close to the expected move, but not below. Now, here is where we have to use a little bit of logic, guys, right? If on Monday morning, Google stock drops to 162, 161, and we get close to the expected move, right? That will most likely free up the 157.5s. So we want to go as low as possible on this chain right here, depending on the size of the move on a Monday or Tuesday session. So the strikes for me for Google this week are going to be 157.5 in the event we get a drop early on in the week, or the 160s in the event Google opens flat on the Monday. I would not be opposed to doing the 160s, even if it is slightly above the expected move. So that is stock number 1, guys. Now, for stock number 2, it's going to be a pair of semiconductor trades, the first of which is ON Semiconductor. We've been playing this one, guys, so much over the past 3 months because ON Semiconductor is in this beautiful long-term range of support, right? It's roughly an almost 3-year massive range of support. You can see it best on the monthly, right? Reacting beautifully every time from the roughly 70 down to about 60 range. So I love playing this stock, and this week as well, it is opening up some opportunities. The expected move, guys, is 67.35 to the downside. So let's go shopping for some ON and see if we can find any premium down there below the expected move. So let's pull it up and go shopping together. And as you'll see, guys, we want below 67.35 for 0.5%, right? So what we're going to be looking for, guys, is the 67 or the 66 strikes. I like 67 down to 65. So watch how ON opens on the Monday or Tuesday session. If we get a little bit of a decline, guys, we will be able to get better than the 67. At a first glance, the 67 is paying adequate premium. You'd need to see at least half of 67. It's roughly 33, 34, right? So you need to see 33, 34 cents on the bid. We're getting more than that at 67, so I wouldn't be opposed to doing this. But if we get a little bit of a decline on Monday or Tuesday, it's probably going to open up even better strikes, guys. 66, maybe even the 65s. Once again, you'd be looking for about 33, 34 cents on those. And the gist of things, right, is we want to be getting as low as possible in this massive range of support. So target those 3 strikes, 67 down to 65. I really like those ones, and I'll probably be playing them myself over the course of this week, should they continuously be freed up. Now, the second semiconductor play we're going to look at, guys, is AMD. So AMD, beautiful pattern right here on AMD, guys, and it stems from how we've been reacting to this area right here, right? Very wide range of support. Talking about this green box, you can see it better, 162 down to about 155. Huge prior area of support, massive congestion right here, resistance, support, and now should be playing a support as well. All of our long-term moving averages are there as well. And we have one of my favorite patterns, guys, the weekly uptrend breakout of the range of resistance, breakout, and possibly retest of the range before running a little bit more. So I love this trade setup on AMD plus the support zone right there. So let's see, the expected move is 161.21. I want to be closer to the bottom end of this, guys, in the mid 150s. So let's go shopping for some AMD and see whether or not we can find some decent premium down in that location. So let's pull it up real quick. AMD. And let's go shopping together. So we want to be below 161, but preferably in the mid to high 150s. Let's have a look right here for AMD. And as we can see right here, we'd be looking for roughly half of 160, right? Which is below the expected move. We'd be looking for about 80 cents. We can see at 160, we have more than 80 cents. So this one is good. But what I'd like to see, guys, is if we have a little bit of a drop on the Monday or Tuesday session on AMD, possibly down into the 165, 164 location, that's going to free up my preferred strikes of 157.5 or maybe even 155. You would once again have to see roughly 75 to 80 cents here to be worth it for you. So I'm interested in one of these 3 strikes. Depending on AMD's move to the downside on the Monday session, I would love to get as low as possible, guys. And obviously, if for ever which reason, guys, AMD has a minus 3-4% day on Monday and challenges the expected move right away, are we going to be trading the super close strikes on a 3-4% move? No, you're going to be going even lower. Think the 152.5s or maybe even the 150s. You want to get as low as possible, guys, while still respecting our 0.5% rule. So hopefully that makes sense for the trade setups on AMD. Now, stock number 3 is going to be Square. Square's been one of my favorite trades over the past few months, guys, just because I do think this company is somewhat undervalued right now. Take a look right here. The PEG ratio in the mid 60s is about a 0.41. That is as cheap as you can possibly get for a growing tech company, guys. They are now net margin profitable, as you can see right here on the bottom right-hand side. It's not always been the case, but they are now net margin positive, and they have beautiful growth prospects, expanding EPS, and ever-expanding revenue as well. So I love this company, and we are in a massive area of long-term support, guys. This is the monthly chart. Take a look at this. This is roughly almost 2+ years of long-term support for us, and we're just now pulling out of that area, but we're still very, very, very close. So this is why I love playing Square, because I do believe the downside, even if we do get a sign, is somewhat limited. And since it's a cheaper stock at only about $6,500 for 100 shares, there is a possibility of averaging down should we retest the lower 60s. But for now, I do like playing the most recent range right here, which is below all of our long-term moving averages, roughly 66 to 64. The expected move this week is 66.93. So let's go shopping on Square and see if we can find any juicy premium below that roughly $67 expected move. So let's have a look right here. And we'll be looking for roughly, about mid 30-cent range, right? Half of 66 is about 33. So you'd be looking for 33 cents. Now, at the expected move, 66.93, we do have enough premium, guys. At 67, we have about 49 cents. A little bit aggressive, right? The 66s are okay at 31. It's not quite 33, but it's very, very close. I would not be opposed to this. However, if Square has a little bit of a dip, and Square sometimes often has these dips Monday or Tuesday, right? It's been the case for the past few weeks. We do get a little bit of a dip sometime Monday or Tuesday. So in the event Square pulls down here, 68, even high 67s, let's say, if they have a minus 2% day or something like that, that is going to free up maybe even the 65 or the 64 strike. So the strikes that I'm interested in Square as low as possible this week, of course, is 66 down to $64. Now, let's say for all intents and purposes, Square opens up Monday and has a brutal day, 3-4% to the downside, and comes below the expected move in one single day down to 66. Are we still going to be playing the 66 and 65s, guys? No. At that point, you want to go even lower, 63, 62, 61. The best thing you can do with this strategy, guys, is be dynamic with your strike prices. React accordingly to the size of a drop on a stock price Monday or Tuesday, and consequently as well, if Square goes higher on the Monday or Tuesday into the 70s, do we want to chase? No, guys, we're not in the business of chasing with higher and higher strikes. We want the pullbacks into the expected move. If it opens green and runs away, perfect, no problem at all, right? We just move on to another trade. So that is it for Square. Now moving on to trade number 4, we're going to be looking at a consumer discretionary one that I think is in a decent little bottoming out process right now, and that is going to be Elf Beauty. So Elf Beauty has pretty good fundamentals right now, and they have not been affected by the consumer slowdown, despite what you may see in the stock price. Their earnings last quarter were beautiful. Management did not signal a slowdown because of the macroeconomic environment right now at all, but Wall Street kind of bundled this one as well in the consumer discretionary category and just crushed their share price in the process. But the company's fundamentals, guys, did not change at all. This is really just a technical based sell-off because of the whole segment that they're in right now. That being said, we're in a very large support zone, guys, roughly the 105 down to about $90 range. And the fundamentals of the company are much better down here than they were up there at the all-time highs. Price to sales, 4.68. For a high growing company, this is a very attractive valuation, guys. The company is now only worth $6 billion in market cap, and they're also, in terms of the PEG ratio, at a 1.63, which is very, very manageable for a company growing EPS at 19% per year. The forecasts for the company are beautiful, guys. I mean, net margins are expanding, nothing bad to see there at all. Their EPS growth for the future is very, very appealing. Their revenue growth for the future is very, very appealing as well. No problems with this company, and all the analyst price targets are largely above the current share price. So I do think there's some decent value down here, right? Large monthly sell-off. We're coming into weekly oversold territory. We've been in kind of daily oversold territory for a while now. So I like this lower location. That being said, ELF also has some great volatility in the stock, so you usually can get some very good deals on writing premium below the expected move. The expected move for the week is 102.69. So let's go shopping if we can find any premium on ELF below that, and you will see the premium on ELF is quite good. Right? I actually need to expand the chain because of how many strikes are offering premium below. So the expected move is 102.69, and look how much further we can get below, right? We can get all the way down to about $98, which gives us roughly 0.5%, right? So I would be interested 98 all the way down to 95. Now, if Elf Beauty pulls down on the Monday or Tuesday session, back down into 106, 105 type of thing, it's going to free up even better premium, the 95, 94, maybe even the 93s, guys. So I want to be getting as close as possible to the mid 90 range as I can, benefit from this large support area, and possibly come into weekly oversold conditions. That's where I like buying stocks. This green line right here is your 200-week moving average, usually a very solid support area for any stock. So those are the strikes I'll be looking at for ELF. Tentatively, yes, the 98s and 97s are, well, the 98s are paying decently, but if ELF has a drop, guys, that'll free up the lower 90s, and those are the ones that I favor. So pretty much what I'm trying to say here is 98 down to about $94 is going to be the target range. I want to get as low as possible, obviously. And the last two trades, guys. So I have some trades for you guys, and these are going to be for more of a conservative play, right? So I have two stocks right here that do not have weekly options. They only have monthly expiries, but this week is the week of those monthly expiries, October 18th. The first one is one that you've seen me play very often on the channel. It is CP, a highly defensive railroad company with a very heavy monopoly and extremely solid fundamentals, guys. So what the stock is doing right now, you can see it on the monthly chart, right? They're trying to get some momentum and break out of this 2.5-year range, respecting the short-term moving averages as best as they can and looking for that monthly uptrend expansion. So we're getting a pretty good deal right now in the 80 range, which is pretty much the higher end of the prior range of support. We're pulling back into it, right? Breakout, retest of this range. The expected move for the week, guys, is 80.56. But this one, guys, is not very volatile. We need to wait for it to pull back. Actually, these two trades are going to be ones that we have to wait for a little bit of a pullback. So let's pull up CP and I'll show you what I mean, right? So the only strikes on this one are 80 or 77.50. As you can see right here at $80, there's not enough premium. You need to see about 40 cents right here. So essentially what we need to see in CP for the early part of the week, we need to see a pullback into the expected move, guys. If we get a pullback into the low 81s, high 80s, that is probably going to free up the $80 strike. And the company is so defensive and so fundamentally sound that I do not mind being assigned at $80 at all. So be mindful of the pullback. I'm watching it. There's not enough premium right now, but I would not be opposed, guys, to being assigned at 80 bucks on such a high quality company. You guys have seen me play this one a bunch over the past years, and I've made some very good money playing it. It's a very defensive one, very stable stock, very conservative, right? So that's play number one. And the other play that only has monthly expiries is Toronto Dominion Bank. So you guys may know it under TD Ameritrade for your trading platforms, but this one is a very large Canadian bank. And look at the support level we're coming into, guys. This is resistance from 2017 to 2020 all the way through 2020, right before COVID. And then it's been support ever since, and we're pulling down into the area right away. Now, TD last week got hit with lawsuit allegations. They agreed to pay a $3 billion fine for some money laundering practices. Now, they're not the first bank that has been caught doing this. Banks get caught with these types of headlines, you know, more often than not, right? Once every 2-3 months, you'll always see one thing happen like this. But I wouldn't say that it's a long-term a negative catalyst for the business, right? They pay a 5.2% dividend. So even if you do get assigned, at least you're being compensated very heavily. And with this big pullback, guys, we're going to be targeting the lower end of this range around the $55 area. Now, the expected move for the week is 55.71. So let's go shopping for TD. See what we can find down there. Once again, this one has monthly options expiries. More defensive play. As you can see, the only strikes available are 55 or 52.50. 55's not paying enough, guys. You need to see at least 25 cents here or 30 cents, but you need to be very close, right? So what we need to be mindful of, we need to watch for TD continuation down here. If we can get into the low $56 range, it's probably going to offer 25 cents on the bid for the Friday close. So I would be interested in this one just because it's such a solid long-term play, guys. I mean, look, long-term is up and to the right, and we're just looking to play the larger support zone for the stock. So hopefully that makes sense, guys. We need to wait for a little bit more of a drop. It's already oversold. One last little push down should do it, should free up the premium. And at that point, you're buying a huge support area into daily oversold, usually a very decent proposition. So that's everything we had for the top 5 options plays of the week. Now, a few of the bonus plays that I'm looking at, guys. So we're going to take a look at some that are almost ready, but not quite. Number one's going to be Enphase. A little bit more risky because it is a solar play, but we know that these should be coming back into favor as we move further and further into the rate cut cycle. That being said, I like Enphase, guys, but only in the low $90 range. So I'm not going to be going through the premium on these ones. Just know that my desired range for Enphase is 90 down to about 85. If I can find some premium down there, 0.5% for a week, I'll probably look to be taking this trade. Trade number two is also somewhat of a more risky and aggressive one. It is BITX. The reason I like BITX, guys, it is a 2x leverage play for Bitcoin. And the only way that I'm playing this one, guys, is I'm using the larger Bitcoin support and resistance levels to give me those trade ideas, right? So when we come down here into the lower $60,000, $58,000 range, I'll be looking to play some BITX in the mid to low 20s. Think 25, 24, 23. The premiums are so juicy on this one because it's a 2x leverage play. And even if we get a sign, guys, the covered call premiums are absolutely phenomenal. So I love playing this one for the wheel. A little bit more aggressive and risky, though, for those of you that don't like playing crypto that much. Another one is OXY. OXY is an oil play, one of the stocks that Warren Buffett is in. And OXY, if we get a little bit of a pullback here to the low to mid 50s, think 52, I would not mind playing this one down here in the lower $50 range. 52 down to about $50 is my target strike area for OXY. So just a little oil play for those of you that are interested. Amazon is another one that I'll be keeping a close eye on. If Amazon retests the lower 180s, it's not ready just yet, but if it does retest the lower 180s to 178, going to be looking to aggressively write some premium down there because we're just going to be looking, guys, for the weekly higher low for further trend continuation. Stock is extremely well valued, well priced right now, and the fundamentals are gorgeous. So all of these bonus plays, you might notice a theme, right? They're good, but they're not quite ready just yet. So I keep them on the side, keep them on a watch list. In the event we get some nice declines throughout the week, I'll be looking to play those as well. Another one is a semiconductor play, LRCX. They just had their stock split. A very, very, very solid semiconductor play, guys. And if you'll notice, they have a big level of weekly support down here. The 200-day EMA is right there. And look at the monthly chart, right? Just looking for the monthlies, higher lows for possible trend continuation right there. I mean, you can argue that they lost the monthly uptrend. This is true. If they come down here, it'll be just looking for monthly support range. So I love playing this. I would like to play this area on LRCX. Have not played them since their post split. 72 down to about 65 would be my target range. So it's a little bit too far now, but if you ever see it come down here, just know that it could be a decent opportunity. Another one is Baidu. I like Baidu. It's the Google of China. The valuation, even with the most recent pop, guys, the valuation around the $90 range is extremely sweet. Super low PEG ratio, very high free cash flow yield. The fundamentals of this business, even though it's a China play, the fundamentals are amazing. Very nice net profit margins, usually in the mid-teens. Very nice expansion on EPS and on revenue for the foreseeable future. So I see no problem in trying to make some swing trades on Baidu in the lower area. Huge, massive support, guys. Last 10 years worth of support, right? This one, however, I want to be getting greedy, right? I want to be getting $95 and under. And as a matter of fact, there is some decent premium for the week at roughly the $95 strike. So this is what I'm looking for on the China pullback trade if ever we get it. And another one that's not ready just yet, but could be ready in the upcoming weeks, depending on their earnings results and how the overall markets work, is Coca-Cola, right? So Coca-Cola, classic trade, guys, monthly breakout of a long-term range of resistance into a retest area. So breakout, retest, and possibly run. If I can get Coca-Cola on a pullback, 66 down to about, let's say $64, not too volatile, but if it comes into our range, I'll be interested in playing Coca-Cola back here. And that's pretty much all of the bonus plays. The other plays that I'll be looking for, guys, is the after earnings plays, but I'll be very picky on the ones that I do choose to play. So some of the ones that I might be interested in playing, guys, Bank of America on a pullback, I'll be looking at it, guys, but the way that I like to play earnings, establish your big weekly levels of support, guys, right? So Bank of America, the only time I'll be interested in if they have a big drop down here, $35 to about $36. If we pull back there, I'll be looking to play it, right? And this is how I'm going to be operating for all the earnings plays. TSM as well. TSM, target the large areas of weekly support, the mid 160s. As you can see, this area right here. If TSM has a big pullback after earnings, I'll be looking to play this area, right? And the same goes for all the preferred ones that I'm looking for. Morgan Stanley. Let's pull up Morgan Stanley. This one as well, targeting the big areas of weekly support. This one could be viewed as a weekly breakout retest. Let me just establish the range for you right now. You can see that there's a lot of price action, right? There was a lot of price action back here in this area. Resistance, right? Resistance a couple times. Resistance and a support, congestion as well. So if Morgan Stanley pulls back here, big move, I'll be looking to write for the Friday close as low as possible in these weekly support levels. I will not be playing every single company, only the most high conviction ones for me. So that would be your job as well. If you're looking at earning plays, identify the high conviction plays for you, and those are the ones that you should be playing as well, right? Charles Schwab, another great idea. If Charles Schwab has a very bad day on earnings, let's say, and they pull back decently into the lower 62 area, I may be looking for, the 60s, 59s, 58, slightly below the support area. That could be an interesting trade as well. So keep your eyes peeled for those post-earnings plays. Only look for the ones that drop a lot, possibly coupled with maybe some short-term oversold conditions, like short-term 4-hour oversold, 1-hour oversold. That's how I'm going to be looking to play the earnings plays after they happen. So hopefully today's video was insightful for you guys. And in the event that you ever want to have all of these plays in real time, you can notice here, I'll go through the list. Since we started the Discord, this is the wheel trade section. As you can see, most of all of them, guys, have all been decent performing winners. And you can see most of the options trades that I've given in the top 5 options plays have also largely been winners as well. A few tiny losses here and there, but those are just to kind of reallocate capital sometimes or to just avoid earnings. Like this loss on AMD was to avoid NVIDIA earnings as a whole. Trade for pre-earnings in NVIDIA, and it just didn't happen. So we kind of de-risked before then. So if you want to get all these trades in real time, plus a bunch more directional trades, long calls, call debit spreads, stuff like that, you can always click the link down below to have access to our Discord. We do private live streams every Monday to Friday as well, live trading sessions, and private videos as well for our members. And you can ask me questions all day in the Discord for plays that you might want a second opinion to. So the link is obviously down below. And in the event that you just want to chill out on this channel right here, we'll consider dropping a like for the growth of the channel. Would really appreciate it. Also consider subscribing to the channel if you're new. We do these videos every Sunday, and then we do the Monday through Friday daily market recaps after the close. And lastly, guys, if you have any questions at all on the strategy, if you want some detailed explanations for something, or if you might want to run a play by me, see what I think about it, always feel free to leave a comment down below, and I'll usually get back to you in the first 24 hours. So thanks very much for watching again, guys. Always a pleasure. Take care. Have a great rest of your weekend, and peace.